Morris and welcome to Things Invest, talk about investing, finance, and fresh development. For today's video terms only, the investment we'll talk about today will be Ethereum ticker ETH. First, I want to say happy Friday, everybody. Hope you had a great week, by the way. Respect to Ethereum, some records of 9:48 a.m. on the Eastern Time. Current trend like $2,775, up about 0.50% so far. So we incurred a little bit of volatility earlier this morning with respect to the job report for July. It released at 8:30 a.m. this morning, right? So we had a slight surge, I would say, around the 8 a.m. mark on the Eastern time. And as the job report released, it subsequently normalized, right? So just on a high level perspective, right? I took a read of the report. And I want to give you guys a synopsis so you don't have to like go through the whole entire thing. So based on the high level read, it seems like it's a relatively positive one, right? So just on a high level, some of the metrics I want to mention to you guys is that the change in non-farm payroll, the number came out to be higher than expected, right? So it's a 943,000 versus the 865,000 expected, and it also revised the number by 938,000 in June. With respect to unemployment rates, it shifted down to 5.4% versus 5.7% expected, and also subsequently went down from the 5.9% in June as well. On the average hourly earnings on a month-to-month basis, 0.4% versus 0.3% expected, and none changed in 0.3% in June. With respect to average hourly earnings on a year-to-year basis, 4% versus 3.9%. As expected, and 3.6% in June in revision. So obviously, with this gradual improvement, it subsequently, provides some surging power onto the equity market. And despite the surge that we had, across the whole crypto market, because it's technically kind of like a safe haven type of affectation that subsequently, normalized from there. We jumped from all the way to close to about 2,790, or try to test the $2,800 again. But seems like we're kind of normalizing, coming back down to more of an ideal comfort level than 2,750, right? So in addition to the job report, which is one of the catalysts of volatility that we already experienced this morning while we're all having breakfast on the East Coast, we are going to be expecting a little bit more volatility coming as well, right? With respect to the weekend affectation that's coming. And also with respect to the media out front, that we do not have a foreseeable understanding on what's the news going to be coming out today, right? And also with the option expiry, right, that is expected to incur on Friday today. So we should see a little bit of volatility ahead of us despite the jump that we already saw, right? So I'm going to go through a technical analysis to see how we're trending going forward, right, with respect to the weekend, the option expiry, and some other affectation that we should be experiencing going forward. What level should we be hovering going forward? How should we be dollar cost averaging? How should we be building a position for the first time? So what is the right methodology to apply going forward, right? So stay tuned, stick around, let's make some money. Alright, so moving on to the technical analysis for Ethereum ticker ETH. I'm recording of 9:52 a.m. on the Eastern Time. Current trend like $2,772, up about 0.4% so far. With respect to the slight surge that we experienced this morning, I guess like Wall Street expectations was basically hedging that the job report coming out today at 8 a.m. was going to be some sort of a pessimistic type of sentiments around the job report, but it came in through a surprise that subsequently kind of reversed from there, right? But the adjustments was not that sharp, right? Despite the surge that we had, which was relatively sharp across the whole crypto market, right? We jumped all the way from I believe at one point today, 2,722, we jumped all the way to $2,809 at one point before the release of the report at 8:30 a.m. Right, and you saw that sharp jump that was very prominent that occurred. Right, and it seems like we're kind of normalizing right now. Obviously, as the equity markets further normalize, you can see that we are experiencing a little bit of sell-off right now. Right, the job report was good, but it was not like a knock off the park good. Right, it's just showing a gradual sentiment around that the economic outlook is slowly reviving. But ultimately, the inflationary pressure is still something that we have to look out for going forward, right? We are watching out for the job report. So if we have any good indicator from the job numbers on a monthly basis, it will give us the translations into how are the Feds are going to be counter, or what are the subsequent actions that they're going to be taking, right? Are they going to be quantitative tightening? Are they going to be quantitative easing? How are they going to be shifting with respect to asset purchasing that they incur on a monthly basis, right? So it seems like we are obviously this is an optimistic view that we're seeing right now on a high level view based on the volatility that we just saw this morning, but still with a more of high level warning on the outcome in a foreshadow perspective, right? So with respect to today, we should be experiencing a little bit more of volatility coming with respect to obviously the weekend affectation. So we should subsequently, if there is no like specific media affectation front that's coming out today, and I have read the news so far, there doesn't seem to be anything specific. There's just a lot of regurgitating news about what happened, and also talk about the juxtapositions of Bitcoin versus Ethereum, how Ethereum is outperforming versus Bitcoin, which is obvious. We have seen the chart historically in the last, basically 2.5 weeks so far, right? So with respect to option expiry today, is again, right, per my discussions yesterday, is relatively kind of a balanced one, versus the call options versus the put options that's currently in play right now. So it could either go both ways, right? But we are ultimately in the business of risk mitigation. And knowing the fact that we did break the 2,750 and we are above it, is a relatively good sign. It seems like we are forming a new consolidation zone, right? Again, this is a platform that we're currently forming right now, and that's why we keep hovering back down to the 2,750, not 2,700, not 2,800, 2,750. Based on the historical trends that we've seen so far, you see all the consolidation zone always have been at the 2,750, right? So we could potentially hover on a sideways fashion, but we have to remember that, with all the volatility that's in play, on top of the surge that we've already incurred for the last, 14 days now, 15 days, that with this weekend, if there was no like specific news that's coming out, and I don't foresee any like major catalysts coming up, despite the Jackson Hole that's going to be happening at the end of August, we might be selling off from here. This might be the peak for now, right? Or we might just consolidate on a sideways fashion because people are reluctant to sell, which is a good sign, right? We want to be consolidated on a new platform, right? The old platform is a 2,450, right? And which we kept bouncing off of that level if you look at that historically. But no, like forming a new platform is like a comparable dynamics that we had back in 2,150. And I think for us to go back down to 2,150 would be not the most logical in the near term, despite the RSI being overbought right now. But I think if we just continue to oscillate on the sideways fashion around these ranges, like between obviously the lowest 2,450, the highest like anywhere like 2,800, which is where I think we might potentially leap up to just to kind of hover if we have any positive search news. But I don't think we'll actually crack down to go below that level, right? Because we do have technically 1, 2, 3, 4 levels that we have to get down to, and that's a lot, right? On top of the 1, 2, 3 that we've had, so that's like basically 5, 6 of the resistance levels that we have already consolidated. That whatever goes down, it will test and consolidate. It will go down, test, consolidate, go down, test, consolidate. So that means there's a lot of resistance then, right? And that's a good thing because there are more long-term investors in play, right? But we also have to understand that we do have to adjust for that caveat that we do have had a large surge already. So ideally, in the best world situation, we will consolidate on a sideways fashion, cool down the whole respective charts that we have on the RSI and the MACD perspective. Ideally, come back down to 2,450, which is where I'm going to be putting my buy order at, and then continue to rally up from there, right? That's the ideal perfect world situation. But who knows, right? The whale can be manipulative, right? We might get like a whale decide to buy in a large purchases in the subsequent days coming up. Because of maybe the depletions that we might experience, and then subsequently you see like we jump through like 5 hoops, like 1, 2, 3, and we hit all the way to 3,000 again. That's something we have seen in the past, right? If you look at the past, right, we've seen those like green candle that's been purchased, right? These are mega green candle and one-time large purchase and then one-time big surge. basically to squeeze the market. And once they got there, they saw people like chasing because they were like, wow, this is amazing. We are going like up in the moon. You saw that red candle, right? When we saw that dip, one of the whales start to come in, they were FOMOing and people were having that euphoric feeling. Again, it's not a logical emotions that they chase all the way and people bought at the top. And that's next thing you know, the bulls are the whales decide to be like, you know what, let's liquidate because that's the time to do so. And everybody was bleeding. And you see the subsequent sell days, and these are extremely sharp because they do have a lot of market power in play, right? Something to be careful of again, right? I think ideally it's great that we're forming a new platform. It's amazing. We love new platforms, right? But how substantive is when we have endured for such a long time of surge already? Something to be mindful of. So you might want to think about this a little bit more before you pull the trigger on buying at the current level right now. Right, just to recap on numbers and technical analysis, again, right, we are at a current level of 2,750, which is a new comfort zone that we're forming. So we do like that. We like that new substantive platform that we're forming. We're further building up our buildings, which is great in an architectural perspective and also in a financial dynamic perspective, right? However, because of the fact that we've endured such a long surge day so far, I think 13 or 14 days of consecutive buy days already, despite the sell-off that we had a couple days ago because of the SEC news, that 2,450 will be a more, I would say risk-averse level for me to dollar cost average at. That's just me, right? Again, I am more risk-averse, and I do have a relatively large position, so we all have different perspective in terms of like how we want to incur risk, right? So do we see 2,250, 2,150? I think unlikely because we are forming a new platform at 2,750. The next level is 2,450. So technically, the next bottom should be 2,450. Unless we have extremely negative news on a consecutive fashion, like 14 days of just negative news, it will basically be a mirror image in comparisons to the last 14 days of surge day, but it will be 14 days of down days. That's possible, and it will be very, very dramatized, and it will be almost seems too coincidental. But that's how it's always been like, right? I don't think there is, we are learning to have that spidey sense to be detectives and see the correlations and how coincidental has it been, right? And when you see that, we know there's something fishy going on with respect to whale manipulations, right? And the last thing I want you to do is to be in the trap by the whales, right? But long-term wise, if you buy in the 2,750, that's fine, right? 9,812 months price target, 20% of corporate adoption, 4 times your money if you buy the 2,450. That's it for today. Respect my technical analysis on Ethereum ticket ETH. Hopefully this is helpful into giving you that clarity. Knowing the fact that we do have various of catalysts that's coming today, that could be a volatile day ahead of us, right? So hopefully you guys are staying sane and staying logical and look at the frames of reference that we've identified so far to dollar cost average going forward, right? Hopefully this is helpful. Give me a shout if you have any questions again. Stay tuned for this come up. Take care. Bye.